Thanks very much. Can I ask my panelists to join me on stage while I introduce the topic? Thanks very much to FinTech Worldwide for having us. Just a brief intro into global digital finance. We are a not-for-profit membership association representing the digital asset space. We have developed codes of conduct for digital assets and crypto assets. To date, we've developed 9 codes of conduct, which have been adopted by over 70 companies. We work with global regulators and a global community of 200 firms in the space. We're also developing more codes of conduct. One of the areas that we are addressing is sustainable finance. I'm really pleased to have such a great panel assembled. Helen, well done for soldiering on back-to-back panels. But let's just go down the line briefly. Brief introductions, a minute each, and then we'll kick into the discussion. Richard, do you want to go first?
Yeah, hi, Richard Pears. I was at Microsoft for about 23 years in the Global Financial Services Strategy team, set up my own business called Responsible Risk recently, and I'm contributing editor at Finextra on their Sustainable Finance channel.
My name is Jamila Noor. I'm a technologist by training and by profession. I've spent the last 10 years working in technology within the financial services and the energy and commodity sector, implementing, supporting, working throughout the whole software lifecycle. And I'm also here representing RFI Foundation, where I'm an advisor on the tech committee for the CDIT initiative.
And many of you have guessed that's not Lawrence Wintermeyer, so apologies for the graphic error. Nicole?
Hi, good afternoon, everyone. Nicole Anderson. I am founder and managing partner of the Red Sand Group. We are essentially a venture studio and soon to be investors in the area of green and impact fintech. So we have spent the last 8 years developing and spinning out ventures on behalf of institutions that are either focused on the green agenda or that have true impact, predominantly, obviously, within the financial inclusion space.
Thank you, Nicole. And I've seen some of the projects that Nicole's been working with, which are very, very interesting in how you can use blockchain to drive forward more sustainable goals. So it's a fascinating area. You heard from me on the previous panel about GovChain. My sort of day job is I run a platform called Unblocked, which is about educating executives on blockchain and holding events and providing more information about what projects are doing. And one of the areas we have looked into is energy and environmental impact and how blockchain and tokenization can be used to drive forward those goals and lead to a more sustainable future. So looking forward to hearing from the whole panel on that.
Thank you very much. So sustainable finance, I guess since Davos this year has been very topical, as well as with the intersection of discussions around climate change and climate responsibility. But when we talk about sustainable finance within the context of fintech and digital assets, Richard, can I turn to you to just give us a sense of what that encompasses?
Yeah, I think that what we're talking about just broadly is how do you unlock the world's capital and make it available to projects that are going to do things, under the heading of the UN SDGs or climate agenda. And the problem fundamentally is traceability and data in terms of actually building those assets, funds and portfolios. So when you look at it in the context of the way it's done today, it's largely done through self-reporting, and there's all sorts of associated greenwashing problems associated with that. So when you come to blockchain, the promise is that you're able to get provenance of the data and the asset all the way through the supply chain, which then is able to much better inform the portfolios that are being created. And one example of that, although not perfect in its use case, but I think it's quite well written up, so you can go and look at it afterwards, is an organization called MineHub. And MineHub is in the minerals extraction business, which is why it's not a great example of a sustainable business, because it is fundamentally extractive and carbon creating. But nonetheless, we use those things in the world, and other practices around corruption and process and human capital, etc., can be improved enormously to make it more sustainable. And MineHub is using blockchain from IBM to actually build a process by which all of the well-stated benefits of blockchain have come into place. But then they're also looking to actually create an STO so that as it sits within that chain, that there's the ability to able to get investment. And one of the areas around is around royalty, which is a standard piece of investment within the minerals business, where fundamentally, I say I've discovered gold, if you will, and so you need the investment to actually go and actually dig that out of the ground. So that royalty is being turned into an STO so that they can get the investment at the early stage and move that through the process. Now, all of this is just sort of one example in this area.
So in that context, what does the application of a security token offer to that process?
So essentially, the way that's happening is because of climate change and SDGs, etc., the investment in the minerals business is going down. So they're not actually getting it through the traditional mechanisms, and there are also many associated inefficiencies in the traditional process. So what this is allowing is more of the sort of PE market to actually get involved and invest in this, so that these investments can go on. So as I say, it's got a kind of double-sided coin to it, right? So you're driving down through investment pressure, in perhaps practices which are socially unacceptable. And this is giving them another way to actually, get access to capital. But there's a greater transparency in it all, hopefully, therefore, better governance. And, if you look at the fundamental thing of a Tesla, right? So a Tesla is a car that people will invest in because they think it's green. And on the consumer, you'll get a green loan. But on the other hand, if you're looking at it as a share, then it might well be measured by ESG quite low because it's actually using lithium ion and cobalt. Now, if you can trace that cobalt to a well-managed business, then actually, you drive up its ESG pricing. So it's a very complex mix of variables, and this is just one piece of quality validation that might actually come into that market.
Thank you. So Richard's touched on some of the inherent challenges in this space, and Jamila, you're working with the RFI Foundation, which as another not-for-profit focused in this area, have been looking at some of these issues around provenance and traceability. Can you talk a little bit about what the CEDA initiative is that RFI Foundation has launched and how you see that evolving?
It came about a couple of years ago from a round table, and it was really about how we can kind of rebuild trust in the civic society with financial institutions and around sustainable/responsible finance. And this initiative is really to kind of build and improve that relationship, so making certain organizations hopefully accountable, so ideally putting down the kind of commitments they have in terms of responsible finance and having the public and civil society kind of review them and rate them in the sense of what they've actually carried out. So it's still in early stages, and we're looking at how we can find the right organizations to partner with and to help build this system out. So it's essentially kind of, I suppose you can kind of say it's like a TripAdvisor, but for financial institutions.
And so within that framework, then what's the role of blockchain? Is it mainly to make that claim that the organization has set out upfront immutable? And so that it can't be altered when it comes to reporting on it? Yes,
exactly. So making it accountable and it's easier to trace, so it can't be tampered with. And I think that's the only way we're kind of going to get to rebuild the trust with the public.
Thank you. Nicole, if I can turn to you now. We've heard about some of the challenges that we're trying to overcome here. And with your aspiration of launching a fund in this space, what are some of the things that you're looking for as signals for blockchain to become more mainstream or help sustainable finance generally become more mainstream?
Sure. If we just step back slightly and we look at the fact and the real huge dilemma that is facing the global financial industry in this transition, right? This decade of transition in order to meet the aspirations of the Paris Agreement. Finance fuels the world. Finance is the biggest catalyst for industry. And if you look down just that value chain to consumers, consumers are everywhere, very aware of environmental and social issues, and they live them daily. But without choice in what they consume, and that's provided by industry, they have very little ability to act. So finance and financial services is the connective tissue and the catalyst for change, and yet the industry as a whole is grappling desperately with how they can upskill and how they can enable industry. So we heard this morning a little bit about the fact that, you know, we're now living in a much more connected world. You know, the transition and the responsibility between big institutional flows of capital and industry are more connected than ever before in this coming decade. So, how do solutions like blockchain, and blockchain not, I don't believe alone is obviously is the panacea, we know that. But it's, as Richard says, the only way to accelerate this transition is to have greater transparency. Greater transparency in how capital is allocated, where it should be allocated, where it shouldn't be allocated, and also to find, you know, new opportunities, new commercial entities, new commercial markets that are viable and could assist or accelerate the transition. So I think blockchain is an amazing, in and of itself, an amazing enabler to enable that transparency. So if I give you an example of one of the use cases, I've worked in a few use cases, but using blockchain in the Nordics, so Helen and Richard know about some of this, but we've been involved in actually unlocking capital using essentially an Ethereum-based engine for the real estate market in Norway and Sweden to create greater access for investors to be able to participate in an asset class that is, number one, opaque for most investors, you know, professional and certainly consumers, very costly. To you know, even enter into the investment cycle. And then also the tenure of return is incredibly long. But blockchain and our solution and this particular use case has enabled much more fluency and much more liquidity, as you'd expect, and much more inclusion, right? So that's one example. Another example of unlocking capital is the use of tokenization in supply chains. And the shorter the supply chain, the better, but generally, in some of these capital-intensive industries, supply chains are incredibly complex and incredibly opaque. And the fusion of blockchain, IoT, and of course, you know, any data, ESG tech, as Richard has coined the phrase, is incredibly useful. And I believe any investor, any institutional investor, cannot claim to be anywhere near impact if they cannot, hand on heart, be able to trace every dollar, every euro, every pound to the source and continue monitoring that capital. And that is an immense challenge.
Thank you. So we've heard about some of the challenges. We've heard about what the industry itself is doing to help overcome those. Helen, if I can ask you, with your sort of GovChain hat on, what role does government really need to play in expediting all of this? We heard in the last panel what they can do themselves for their own purposes, but what does government need to do for wider industry?
I think it's really interesting because we've kind of heard three sort of examples of what blockchain could be in relation to this. You know, blockchain could be green in the sense that it just provides efficiencies in supply chains or in business processes which make them more sustainable because we're getting rid of waste and paperwork. Blockchain can be kind of a trust machine, which is what the Economist called it, which is, you know, being able to know where things are coming from, how money's being spent, and prevent, you know, the greenwashing and those kind of issues, or just sourcing more sustainable goods and services and preventing some of the more environmentally damaging practices that go on. But it can also be sort of this incentive machine for actually, money talks. It's what drives us all to fund our businesses, to get a job, to spend our money in particular ways. But we can now talk to money with blockchain, right? So we can tell our money what to do. If you have a digital asset and you have a smart contract, you can essentially embed priorities and incentives within the money itself. So I think that's what's really interesting. So government can have a role, I think, in creating the right incentive structure for that to happen. So that could be, creating, a better policy environment for blockchain businesses and digital assets to have a clear signal from the regulators that they're open for that business in this country or in other countries. But could it also be, we have green finance strategies and so on. Does that really kind of sit in a wider context of innovation, or is it just sort of seen as a standalone thing? Because quite often policymakers put things in all these different silos. So, they'll do a green finance strategy and they'll say, right, we've got to meet these environmental and social goals, but they don't really see that blockchain could be a big piece of allowing them to actually deliver that strategy. So they're not linking that kind of policy framework and the people that have those discussions with people in the technology world. So I think if you could bring those different groups of expertise together, blockchain and digital asset companies could be a key part of delivering that strategy, which, is a big government priority, but maybe they're not really involved in a lot of those discussions. I know some people here are, but, the wider community is not. And certainly investors that I've spoken to have said, we really want to invest in blockchain businesses because we can actually see this as a way for us to meet our goals of impact investing. It's not only that we like those companies and we think they're good for the world, but it actually allows us to be compliant with the things that we're trying to do. So it gives us this really clear way to actually get the data and prove that what we're doing is valid and not just something that we've sort of tried to create new processes for that we can't really audit and prove in a clear way and have the clear data to show that we've done what we said we were going to do.
Thank you. We've got a few minutes left. I'm going to open up to audience questions because I've got more, but I'd like to give you the chance to ask the panel some questions. Anyone got any burning questions they want to ask? No hands. Okay.
I have one for Nicole, actually, which is, in creating this fund, is that where the demand is coming from? Is it investors themselves saying that they really want these products? Because it seems to be that, many, certainly, especially a younger generation of investors, particularly, people that I speak to in the kind of cryptocurrency and blockchain world, they really do care about these issues and they would like to be able to put their money in places that support those kind of goals. Is that where the demand is coming from, or is it coming from the institutional side just because of kind of regulatory and compliance issues?
If I'm honest, I think there's part a tailwind, which, it's timing, so very fortuitously. It hasn't happened often in my life, but it's happening now. Mainly because of the project work we've done in building ventures that have had direct impact. For all our ventures, we've either seeded them ourselves and invested directly or gone on to secure other investors. So there's always been a community of investors we've worked in that have known and believed in our ability to execute. But I've been more and more drawn from social impact to more environmental impact in my work. And there, the piles of money have just got bigger. The problems have become more connected. And there, obviously, and then you have this overlay of huge amount of I guess, scrutiny and challenge of, all right, how do we unlock this capital? So that I basically brought that together and said, right, if there's ever a time to look at spearheading innovation in finance, this is the new wave of fintech. And I'm fintech through and through, for good or for bad. And I just think this, I've been able to stand on any soapbox that anyone has been able to give me and said, this is the next innovation wave, and it's a different friction point, because with financial technology innovation of the last 10 years, in the main, 80% of that has been spearheaded by retail investors or the person in the street, right? The inclusion, the exclusion, the credit crisis. Now, the friction point is big pockets of money, so institutional challenge of being able to deploy capital is a massive issue, and then you link that to the regulatory fluidity, which is another opportunity for innovation, always has been. RegTech is a big segment, and you bring these two forces together, and if they don't get it right, we're basically going to starve industry of capital. So putting all that together, that's the thesis for the investment, our investment thesis and our fund structure.
So then I guess a follow-up to that, there may be people in the audience who are from financial services firms who are not necessarily blockchain enabled or haven't really thought about the sustainability of their business. As they seek to address this space, what are the things they should be looking at? Now, obviously GDF has an aspiration to be a starting point for that with some of the codes of conduct we've produced around how you issue a tokenized security, for example. What else do companies need to be looking at, especially on the sustainable side? I don't know, Richard, if you want to maybe address
I think one of the challenges that it always comes back to, again, it's back per the example that I gave on MineHub. But the problem with that is, although it's kind of an interesting example, it's a particular set of technology, it's a particular consortium, and it's all sort of private and permissioned, which is needed, for the private data which is being exchanged between those organizations. But if you do want to sort of move to the world that we're hearing about from Nicole, where kind of the world's capital is going to get allocated, then there needs to be more transparency. And the speed with which it will take to get the technology in that example to move across every industry and every scenario, so that the FTSE could build an index which it believes is universal based on that kind of set of truths, is very limited if we're doing that kind of consortia permissioned approach. So, I mean, the sort of things that I'm interested in, I don't know if it's the answer, but I'm interested in this sort of baseline protocol, which I don't know if you've heard about, from Microsoft, EY, Ethereum, Consensus, and so forth, where they're sort of saying, well, maybe we move away from blockchain just being where the record is held, but actually to becoming more of middleware. And that makes some sense to me, because then you can actually interoperate better with all of the existing technologies, diverse as they are around the world, and then you can start to use its strengths, but also within the existing weaknesses of an incumbent market. But then you should get transparency much more rapidly into deliver these sort of solutions that we're looking for. So I would say look to blockchain not just as it is today as the panacea, but actually what it delivers and what it can deliver in its next, perhaps incarnations.
So we are running out of time, but just briefly have one more question for each of the panelists. Actually two. Firstly, if we're convening here in a year's time, Blockchain 2021, Blockchain Week 2021, where do you hope this space will have moved to? And if the audience want to find out more about what you do, perhaps Jamila get involved in CDIT, how can they find out more? Richard, can we start with you and go down the line?
Yeah, from my point of view, I just hope we'll have some really good more case studies, which really show to people the art of the possible. So simple as that. And then where can you find more? I think the best place about me is to go to Finextra/Sustainable. We're building out a channel of video research, editorial, interviews, and we hope to showcase some good examples there.
I think in 10 years' time, as Richard said, we'll probably have real-life examples and use cases of where blockchain has been successfully implemented, because as everyone knows, it's at early stages at the moment. And to find out more about CDIT, RFI Foundation have a website, and you can also reach out to me on LinkedIn or connect to Blake Good, who's the CEO of the foundation, can provide more information on how to get involved.
Did you say a year or 10 years?
A year.
Okay, all right. So in a year's time, look, I think, I back up what Richard has said. I think it'd be very interesting to see how blockchain becomes infused to drive some of the normalization of standards, right? Because we desperately need that in this new world of sustainable finance. I hope I'm not going to be, banged over the head as I walk out today, but I always talk about ESG is incredibly, I mean, we should be living and breathing it, but ESG scoring is a little white lie that the entire industry is perpetuating. And I think blockchain has an amazing opportunity to actually normalize the disparity of scoring, both private and public companies. And I don't know if that could be done in a year, but no, I doubt it. But, on our way there. To find out more about me, just look us up, the Red Sand Group. And I'm Nicole Anderson. Look, I'm on LinkedIn. Yeah.
Thank you.
I think the year is sort of both a long time in politics and a short time in policy making, so I doubt a huge amount will change in a year, but I would like to see sustainability more included in every aspect of policy making, and I think as far as blockchain goes, there are specific things that could be done, incentivizing sustainable blockchain projects into sandboxes, things like that, widening the criteria for looking at how some of these technologies are included in different policy-making areas so that you don't just have these kind of, well, that's environmental policy and this is innovation policy, but actually these two things should be joined up. So I would like to see more of that. You can find out more about me at Unblocked Events on Twitter. Also on our website we have all the materials from an event we did called Energy Unblocked, where we looked at various projects like this which are using tokens to incentivize use of renewable energy, or actually MineHub were at our supply chain event back in September. So there are lots of videos and resources you can find there if you want to learn more about sustainable blockchain projects.
Thank you. That's our time up. Thank you very much to a fantastic panel. Thank you for your attention. Just finally, you can find me on Twitter and LinkedIn, and if you want to find out more about GDF, we're at gdf.io. And we do have an open call for input for Sustainable Finance Working Group. So if you'd like to get involved in that, please get in touch. Thank you very much.